Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday, the 10th of January. Starting off with the FTSE 100, which is above the 50 and 200-day lines. It's also above that broken December resistance line there, 82.50. And the most exciting aspect there, which has only really developed this week, is the way that the 50 and 200-day lines are both rising. So the next time they cross, which actually could be quite soon given how close they are, it will be a golden cross, and the run-up to a golden cross tends to be the strongest part in the cycle. It's difficult, obviously, to work out what may make this market shoot forward, apart from maybe a U-turn from the government on policy, or obviously the run-up to a new president, or President Trump in the US. But such conjecture aside, the support here, 82.50, and in the first instance, the 50 and 200-day lines are 8200. Worst cases is a rug pull down to 8100 in the floor of that September 2023 channel. Obviously, we've got on the upside 8400, and then the top of the channel there 8670. But just really looking at 8400 now, I think we'd be quite pleased with that. The latest rally started with not only a bounce off the 50 and 200-day lines, but also a bounce off RSI 50, which is fast becoming one of our favorite leading indicator signals. Moving on to the DAX, and here quite into the week, but at least we've closed and remain above the top of the first gap down that we had last month, so 20,200. Above that, looking for hopefully a relatively easy assault on the record highs from last month through 20,600, and wanting to hit the top of that channel, basically 21,000 by the end of this month. As you can see there in the RSI window, we've had basically three bounces off RSI 50. That gave us the bounce above the 50-day line at the end of last month, and has proven to be correct as well in the recent past. On to the Dow, which is curiously out of sorts at the moment, doing even worse than the FTSE, and here you can see that we're just hugging the floor of that rising trend channel from early last year. Nominal level there around 42,400, and there is the risk obviously of November support at 41,600, but at least while we're holding that channel, looking for the upside to be the top of the recent range in the 50-day line at 43,400. The positive at the moment is the way that actually the 50-day line is arced back up again, so we actually have the 50 and 200-day lines both rising, and therefore a golden cross type situation. Moving on to Bitcoin, where we said that 92,000 and the uptrend line from November was the line in the sand, and that's proven to be the case. It was the case yesterday, bounced just above it. Initial resistance, the 50-day line, the 97,200, but obviously we're in that range between the record high 108,000 and 92,000, so you can take your pick. Moving on to gold, and here progress in terms of bouncing multiple times off the floor of that rising trend channel from last February. RSI bounce off neutral 50, and now holding above that 50-day line at 2660. Above that, looking for 2750, basically post-November resistance. Quite exciting to look at pound dollar at the moment, given that the crisis in the bond market, etc., etc. We have, we obviously had in October 22, we had the Liz Truss debacle, and it looks like we'll have a Rachel Reeves debacle. The only difference here is that pound dollar is rather higher than it was then, so we're actually looking for $1.18 as the floor of this latest move if we do break down and stay below the broken uptrend line from October last year, or October 2023 rather, at 126. So below 126, the risk's 118. And obviously, we'll see how that pans out. If you're close to the market, then you want to see this market stay below the old support there from the beginning of this month, around the $1.2350 level. So that would be your line in the sand. Moving on to the stocks, and here rather esoteric selection. Not that many to choose from, but I managed to give a big list anyway. Here we have on Challenger Energy, rising trend channel there. We've covered this recently. Top of the channel there at 10.6 pence. We're looking for that by the end of this month, while we remain above recent support at 7.75 pence. So hopefully the shares will deliver. The other point to note is that the 50 and 200-day lines both rising at the moment, and therefore we're in the run-up to a golden cross, which should hopefully happen before the end of this month. Moving along to Genflow, and here it's a triangle reversal situation, broadening triangle there from July. We've had the consolidation on a rising 50-day line, V-shaped bull flags they call it, and actually the 50 and 200-day lines both rising again. That suggests that we should head to 2.5 pence by the end of this month, and maybe the market looking forward to yet another grant for this company. Multiple bounces for the RSI at and above neutral 50, so at least 3 of them I can see there. And the upside valid 2.5 pence, valid while we're above the recent support there around 1.8 pence. On to Immupharma, where the name of the game here was to work out or hope that the shares would hold on to as much as possible of yesterday's gain. So far they've done that, so that they managed to remain above halfway above the halfway point of that range yesterday, so from around 1.4 to around 4 pence. The low so far today around 2.7 pence. Old resistance from March to May was 2.7, so old resistance becoming new support. So basically above 2.6 pence, looking for a retest of the 3.8 pence zone from yesterday. Best case scenario, if you're a fan of the shares, would be for the shares to hit the line of resistance up to 4.75 pence by the end of this month. But we do need to see the shares remain above 2.6, which at the moment it looks as though they will do. On to a stock which I haven't looked at for a long time, perhaps since it was called Pires, but here, a bit like the situation at Immupharma, we've had a big spike higher, and the secret is to see where the support will come in, so we don't just go straight back down again. Recent resistance around 0.9 pence, above that, looking for the top of the range, 1.6 pence, hopefully by the end of this month, but obviously we've got to stay above 0.9 on Mindflair. On to Oxford Biodynamics, which is, well, amazingly with the fundraise news, is trying to gap off the lows. Best case, I suppose, at the moment on a technical basis anyway, is that we get up to around the 1.7 pence level after multiple bounces below the 1 penny area that we've had over the recent past. Missing ingredient here is that we want to see the RSI back above neutral 50. It's 46 at the moment. Onto a stock which is always rather difficult to get a handle on, but at the moment, probably the best that you can say is that we are trying to break the downtrend in Physiomics in the shape of the 200-day moving average, 0.89 pence, or call it 0.9 pence. Below that, we're still in a bear run. Otherwise, if we can get a weekly close, or at least an end-of-day close above that, the target here could be towards 1.1 pence, basically filling the gap down from July. On to a stock which has had a decent recovery in the recent past, which is Pantheon, and here looking for the final move of this recovery that we've had from around 14 pence. The view at the moment is that above the December resistance there at 30 pence, looking for up to 44 pence, although it has to be admitted at the moment, shares good looking a little bit tired after their recent gains. Good news on Poolbeg, where the RNS today has been relatively well received, as it was, as the RNSs were earlier in the week. Obviously rather strange, we had that rather horrible rug pull at the beginning of the month, but the shares probably on an overshoot, looking to rebound back towards the 6.5, 7 pence area, at least testing the old support there as new resistance. And we're looking for that while we remain on the right side of 5 pence. Stock which is has not had a dull moment in the recent past is RC365, and here you can see that we had that massive bear trap candle, but since then we've bounced above a rising 50-day line. Initial target here was 2.1 pence, and we can add in a fresh target here as high as 2.5 pence by the end of this month, while we remain above the November resistance around the 1.6 pence area. Onto a stock which I covered a little while ago, and it's done rather well in the sense that it's managed to break the first target there after breaking recent neckline resistance at 67 pence. Our target was then towards £1, and above £1 now we're looking for up to £1.63, which is the upper parallel of that November triangle, broadening triangle on the daily chart. I suppose initially you have the 200-day line as a block at £1.45. Verici is next, another stock which has had decent coverage here, and here breaking out of that falling wedge, stalling at the 200-day line at 6 pence, but Above that, on an end of day close or a weekly close basis, looking for 9 pence, maybe by the end of next month or even sooner. A nice €500,000 loan from the CEO for Vast, and the shares up, as you might expect after that. Rising 50-day line and a consolidation above that. I call that a sideways shuffle. And really looking for the shares to build on the initial January resistance at 0.1 pence and head maybe as high as the 200-day line at 0.16. I suppose after today's news, then you'd expect that it would be unlikely there would be one of the company's rather frequent fundraisers, given the money that we've had coming in today. On to the last two. The first one is one which is looking surprisingly encouraging at the moment, which is Xeros. And here the reason for that is that we've had the shares flatlining at the lows on 2 occasions for an extended period, but now they've broken back above the previous low. They're at 0.42. Above that, on an end-of-day close basis, we are ambitious enough to look for 0.6 pence by the end of this month. Finishing off with one of the best rises of the recent past, and here it comes in the form of Zenith Energy. We sort of called this up from the lows, and the current situation is that we've hit our third target there at 6 pence. End of day close above 6 pence. We're looking for one final leg up over the near term, which is up to 9.5 pence. Maybe see that by the end of next month. But obviously, in the meantime, we need to stay above the recent support for the shares around 4 3/4. Nice V-shaped bull flag there. And as you can see, there's only been a couple of red candles there on that chart since the beginning of November. So very impressive stuff. Indeed, you don't normally get that kind of price action. That's it for me today. More updates over the weekend.